Welcome to the new weekly outlook, everybody. So we're going to start off with the fundamental side and then move on to the technical side with Stefanos.
What's going on, guys? Hope everyone's having a great start to the week, and let's break down the charts and give you a good idea where price is going to go.
Yeah, and then very quick announcement, the details will be coming in very soon, but just so you guys are aware, Stefanos and I will be hosting a boot camp on May 28th. We will release the details in the upcoming weeks as we get closer, but just so you guys know, for whoever is interested, feel free to reach out to either of us for more information if you want to. But let's go ahead and move on to the fundamental side. There's not going to be too much going on this week besides interest rates and stuff that we have coming up. But we are very aware of the macro fundamentals, the geopolitical stuff that's going on right now. And clearly, there's no sense of progress in a positive way, in an optimistic way. If anything, we just know that the war is still continuing. So we had, for example, the United States, Biden providing a lot of support to Ukraine. Now what we have is UK Prime Minister Boris Johnson also delivering a virtual address to Ukraine's parliament on Tuesday, so tomorrow. That's going to be comparing, the topic is to compare the Eastern European countries' struggle to Britain's during World War II. But the key thing here that I kind of want to focus on is the fact that his government has announced a new package of about £300 million in military aid to Ukraine. So quite similar to what the US is also doing. On top of that, what we also have is the EU discussing, and they're going to be providing more details on how to help the companies in the European Union move away from the Russian oil and the Russian gas, and pretty much what are some other alternatives that we can kind of move towards. So we know that the EU, the UK, the US, and a lot of countries in general have placed sanctions on Russia, but that hasn't really stopped Russia from doing, whatever it's doing right now and demanding to pay for gas in other than the dollar, right? So they started moving towards their own currency. So these are the two important things that we do want to keep in mind as we start looking onto the chart side. And then also the US defense official saying that Russia has made limited progress in shifting its war towards the Donbas region, adding that Putin's troops are just continuing to move into different regions of Ukraine and just continuing on the war. So I really like this article because it's a quick little breakdown, but if you want to go and look at the key developments, then you can, scroll down and take a look at that as well here. The second thing, this is more on, go ahead.
I was going to say, it's a shame they waited this long to, go independent on Russian oil. Like, why is it taking almost 2 months?
Yeah, but it's also because they've heavily been dependent on Russian oil for decades now. So anytime you're trying to do like a big shift like that, of course it takes time. But the fact that I'm more interested in seeing how they're going to do it, right? What's the alternative sources that they're going to be moving towards, where the US did say that, hey, we'll provide you some oil and some gas from our reserves. But, that can only happen for so long. They're going to need to find another suitable alternative.
Yeah, we can do the reserves. I'm saying, start, drilling in the US and then we supply Europe, and the Western world kind of goes independent on oil from the Eastern world, something like that, it's an easy decision.
I think that's going to be very interesting. Of course, there's going to be some aspect of clean energy and trying to bring in that. But again, I think it's too early to be completely dependent on that. I think there needs to be a lot of progress in that space. 100%. So on to the next article here. So this is going to be important, especially when you're looking at, Japan's status as a safe haven currency. So the biggest treasury buyer outside US quietly sells billions. So what we're starting to see already in the Japanese bond market is that a lot of investors were pretty much just dropping the bonds, right? We start to see a lot of investors moving out of the yen, and they're looking into other currencies, and potentially they're looking for opportunities here in Europe instead. So as we continue down here, what we're starting to see is a lot of central banks in general, pretty much everybody outside of Japan, increasing their interest rates. We do have the UK and the US interest rates coming out this week. Last week, we have Bank of Japan's interest rates, and they maintained it at negative 0.1%. So what we're starting to see is a massive sell-off of yen from a lot of the institutional investors and investors in general, right? Not just institutional investors, but we're starting to see that nobody's really stepping in to help out. And what we also had in addition to this was the Bank of Japan stepping in, and they were buying up unlimited amounts of the bond, the Japanese bond. But that was an attempt to kind of provide this sense of calmness and sense of security to the investors, but obviously that just ended up doing the very opposite because they are not shifting away from their accommodative monetary policies. So what we have right now is Japan's $1.3 trillion stockpile, but the pulling the investments and all of that just continues to grow, and we're starting to see a lot of investors now just completely moving out of the Japanese yen and moving into other currencies instead. So the question now that becomes is that the Japanese yen for decades has been the safe haven currency after the dollar. So pretty much what happens to that status and how long is it going to take if the Japanese yen does fall off of as being a safe haven currency, and what's the next currency that's coming up next. So pretty much emerging currencies and emerging investments in an emerging safe haven currency is pretty much what we're looking at. We had the similar thing happening to the US dollar during COVID time. So not like too long ago, but in the last 2 years, the US dollar's status as the world reserve currency was also questionable, but it seems like we've been able to kind of bounce back. And I want to see if the yen is going to be able to do that or not, or is it going to maintain its volatility?
The dollar is above 100.
Mm-hmm. It's like 103. I think I saw that today.
Yeah, 103.50.
Yeah. And then moving on to the economic calendar side. So we start off quite easy. Yesterday an Asian session. Today, pretty much the same thing. So we have the GBP bank holiday. Nothing much happened in the London session. Just a ton of final manufacturing PMIs coming out and low impact news coming out. Today in New York session, we did have the manufacturing PMI from the US come out, which is a little bit lower than the previous, which is what we were expecting as we're kind of moving back into this state of volatility from an economic side as we continue to increase interest rates, and we are starting to see those effects across economies and different sectors, right? And then today in Asian session, bank holiday, so kind of a silent Asian session today. But you also have, if you're trading the Australian dollar, then you have the interest rates coming out today. So they are expecting a hike, but again, pay attention to what their statement is going to be. That's going to give you the outlook. Now, going into tomorrow, of course, this is going to be the first Friday of the month this week. So obviously there are a lot of employment data that's coming out, and that's what you want to start paying attention to if you're going to be trading NFP this week. So tomorrow in New York session, we have the job openings coming out. That's going to kind of give you a nice little outlook to what to expect when it comes to employment side. But other than that, not too much else coming out, right? A lot of low impact news. If you're trading the New Zealand dollar, then you have unemployment rate to kind of trade on some of the lower time frames, 15-minute, 30-minute time frames. But again, tomorrow's Asian session, I don't expect there to be too much volume because it is a bank holiday in Japan and in China. Going on to Wednesday, that's when things start to pick up a little bit. So in New York session, we do again have the non-farm employment change coming out. But again, I don't expect the market to react too much to that because after a couple of hours, you have the interest rates coming out. So what we want to see is, are we going to see a 0.5 increase right here like we are expecting, or is it going to be a little bit, we could increase interest rates but not too aggressively, so it's going to sit around, let's say 0.75 instead of 1.0, right, directly? Or are we going to come in with something a little bit more aggressive? So we have all three scenarios pretty much on the table from a lot of different officials at the central bank, at the Fed, right, saying that, hey, we need to be a lot more aggressive and maybe we need to do a 0.75% increase, right? Or some people are saying that, no, I think we're pretty much, showing the progress. And so just increase it by 0.5% and just maintain it that until the end of the year. And some people are saying, let's do it in small increments. But the fact that everybody agrees that interest rates do need to be increased to fight against inflation. Now, if you do increase interest rates too quickly and too fast, you do kind of run into this problem of, can we see a potential recession going on, which is going to be worse because you're just going to end up, cutting back on the interest rates again. So I want to see what happens at the press conference and also the statement. What's the outlook look like, and what's the process that we're looking at until the end of the year? Are we going to continue to increase interest rates every single meeting, or is it going to be, let's do a little bit more aggressively right now because we know that inflation is a problem, and then later down the road we can, think about just maintaining the interest rates or cutting back? So those are a couple of different questions that I will be asking specifically when I do read these statements and listen to the press conference. Again, a Japanese bank holiday, so I do expect a quiet Asian session this week, unless there's macro fundamentals that are coming out to support the move. And then on Thursday, And pre-New York session, you have the interest rates from the UK coming out. So same thing, they are looking to increase interest rates, but the last time they did that and they were sitting at 0.75%, the market did not react very, in an optimistic way to it. We did see the pound kind of losing its strength. So is that something that we're setting up for this week? And we'll move on to that onto the technical side here in just a little bit. So again, pay attention to their monetary policy report. And then also when the press conference happens, we want to pay attention to that as well. If it doesn't seem like we have one right now, but if it does get added to the economic calendar here. And then you have the challenger job cuts. So still paying attention to what's happening with NFP. You have unemployment claims coming out. And then one other thing very, very important that you want to pay attention to is going to be the OPEC meeting, because we know that there's a lot of issues with, gas and oil and all of that. So this OPEC meeting is going to be very important to see if the OPEC, pretty much the cartel, agrees to produce some more oil and put it out and kind of help with the inflation that's happening because of the low supply of oil. And then going on to Friday, it's NFP. So we're going to be paying attention to that as well. If that's going to be decreasing, or are we starting to see more jobs opening up and people actually getting employed? With that being said, I'm going to go ahead and pass it over to Stephanos now. Go for it, Steph.
Break it down. All right, we'll start with GJ over here. I'm not going to do a full breakdown. What I'm going to do, if you do want the full historical reasoning of why GJ is where it's at right now, you could go back to the previous weekly breakdown that we did. But right now, I'm just going to focus on some of the recent levels and some of the recent price action that we had as price came back up to 156 over here, ended up holding support at 149, previous candle body highs over here to the left. We break the multi-year downtrend over here, hold support, grab liquidity after Russia invaded Ukraine. We flip bullish, ended up closing a strong bullish candle right here with a wick to fill. This candle barely created its bottom wick, and we just had all of that momentum to continue up, filling that wick and continuing back up to these levels up here to the left. As you can see, this previous support here at 167,500, right? So that's definitely a significant area. And then what you could see is this current monthly, or this previous monthly candle, ended up closing below this previous resistance and support over here with this wick as well, right? So now looking at the current monthly candle, right now we are bearish. Are we going to continue down? What level is this right here? 163 or 164. Is it significant, and why is price bouncing off of it right now? Are we just creating a bottom wick to continue up and fill that wick up there? Or possibly. And as Sharma was just talking about as well, you have such a weak Japanese yen right now, which has been pumping GJ up as well. So you got to take that into consideration. But looking over here, 164, I have that marked off over here to the left. Again, that previous wick and the resistance here to the left as well. Price ended up creating this high up here, closing a very weak doji bullish candle here on the previous weekly, or two previous weekly candles ago. We get the top wick formed on this candle, then we pass the low of that candle, coming all the way back down into this area over here. That we're just going to keep a horizontal line for now. I'll adjust it to a rectangle when we go down the time frames. But looking at this current weekly candle, we already created a top wick. Now we're flipping bearish. Are we going to continue down to fill that wick, or do we form support over here, reject it with this candle over here? Now we're going to form some kind of a support to continue up to retest the highs. All right, looking at the daily, now it's getting a little bit clearer. What you have is this support. You could just draw like a big zone right over here, but we ended up holding support here and then reacting to it last week, where we ended up holding support after this candle closed with no bottom wick, held support and continued all the way up. But now we're starting to approach, or we already did approach, this previous support and resistance here to the left, right? This is a significant level, 164. Obviously we saw on the monthly and weekly as well. But the previous daily candle today ended up flipping bearish and closing bearish. We're also creating lower highs over here to the left with these wicks as well. So there's some kind of bearish tension or momentum that's pushing us down from here. So are we going to get a top wick on that candle, flip bearish, passing the low of that candle and continuing down to retest the support, or are we going to hold some kind of a support in this area right here, previous resistance, to then continue up? But maybe on the higher time frame, safer buys are going to be above 164 here.
Yeah, if I could add one more thing just about the zone that you had, it's just an additional detail, but it's something that you start to understand as you start looking at the charts more, is that this zone, if you were just to extend it over, you probably see the same exact thing. But in this area itself, you could tell that this is more like a liquidity area as well. As price tries to reject this, you see some good volume here. The following candle makes that bottom wick, and then look what happens on the next candle after that, right? A ton of volume. We come back and revisit this area again, and the same thing, a ton of volume. We come back, revisit that area again, and again, ton of volume. But I do agree, that's the same thing that I'm looking for. Sells below this zone, so then we can break below the previous daily low, or buys as price, gives us a nice little break and retest maybe here on the 4-hour time frame, so we can continue a move, something like this.
Yeah, you make a great point. That could definitely be happening over here, especially with this candle, like the way this bearish candle closed. Right? Like there's something about that candle that tells me like we may be holding support here and then just like continuing up, but we got to wait to see what actually happens. But you could have different biases. You could have like, all right, if we're going to take a buy, we need to wait for something like this to happen. If we're going to take a sell, we just need to wait for the support to break and breach, and then we can take this right back down, depending on how the candles form on the lower time frames.
Yeah.
But looking now at the 4-hour, now you start to see this range that we're sitting in, right? I'm not going to draw a trend line right now. Yeah, don't worry about the trend. What you can worry about is the current levels that we're at, which is easy enough. So once you see this, you're now printing sideways, right? So right in here. And now it's a little bit harder to trade. We are bouncing off a level, and there are certain zones or certain ranges that you can be trading. So what's like going on right over here where we're holding support? Can we take advantage of this bounce to bring price back up here? That's the only thing I could see us trading inside of here. But what happens if we end up closing below this level right here and continuing down? Can we end up mirroring the move to the left and continuing down from there? Possibly.
Right. And right now it seems like we're holding on to a support because the current 4-hour just broke the previous 4-hour high.
Yep. Yeah, 100%. We got an engulfing candle, higher low formed. So I could definitely see that, right? We could definitely bounce off this level over here. Held a strong support here, right? Held strong support here until we got some volume during a pre-New York session and just pushed us down, which I like that formation, by the way. But looking at the 1-hour now you're starting to, you see that bounce. We have that resistance right here where that price is at right now. And I say I would draw it like right here. We need like a clean close above this whole level right here to bring price up, right? If we get a support held right in this area, I could definitely see us continuing up from here. Retesting this resistance up here to the left. You may want to be careful. Like this is, very sticky price action to be trading in, but at the same time, you got to take advantage of some of these bounces.
That's where you have to understand the limitation of your trade, right? So you take it as quick scalps and then you try to let them run as much as they can, but also understand basic price action, candle anatomy. Your candles break the low, stop being hopeful that's going to go in your direction, but be realistic about if it breaks below a certain level, then for a fact that price is going against you.
100%. Limitations of your trade. Sharma's famous quote.
Yeah, I think I'll put that on a shirt.
Yeah, right. Understand the limitation. That's great. Okay, so you got that previous support here. Now you can see it a little bit clearer on the 30-minute. Now the 30-minute, you're seeing the support being held, and not to mention a higher low. Right, so we see some of that bullish pressure. We're trying to break up, but right now we just rejected this level. How is this 30-minute going to close? We always talk about always understanding what time it is right here. So we got about 6 minutes left until the 1-hour closes. Right? How does the 1-hour look? 1 hour maybe closing a weak bearish candle, but nonetheless, we're still sitting in this range. So you got to wait for price to break this area, and then you could possibly take something like that'll be your next scalp. But how many pips do you have in here? Oh, plenty. As long as you get 25 in a range, you could trade that. So you could at least grab 10 pips within here. And then obviously leave a runner, use dynamic risk, and leave one of those positions, letting that go till 163, 700, and eventually 164. All right. But I wouldn't take any sells until we start breaking 162, 300. Then you got a clean move to the left here.
Absolutely. So also, while we move on to gold, real quick note is also that when you're looking for your trade opportunities, you always kind of have to make this decision of, should I be taking a specific trade just to take it, or should I be waiting for a better entry and a better trade that I could probably let it run for a longer time? So again, it comes down to your style of trading, which could be anything between like scalping or day trading, swing trading, position trading. It can be either of those. You don't have to be just one. It could be a mixture, but it also comes down to making those decisions of quality over quantity, right? Are you just going to continue taking 5 pips, 10 pips, or is it better to take, like, let's say a 20, 30 pip range, 40 pip range trade? And if that requires you to wait a little bit longer, then that's kind of where you test your patience.
Yeah, I mean, patience is the number one. I mean, you could say number one about everything in this, but discipline, everything, but patience, really. If you just wait for your ranges to break and wait for that clean move to the left, you guys are going to be in good shape. It's all about the decisions that you make within the market and within your session. If you can cut those emotions out as much as possible, obviously they're always going to be part of every decision that you make, but if you can cut those out as much as possible and just stick with what you see as far as like during your back testing sessions and everything, you see those setups that you're normally seeing that are working, right? If you just look back in your journal within the last 20 trades, you'll see that like most of your wins look pretty similar. So just take that for what it is, and use it to your advantage, and just be patient, wait for those setups.
100%. And most of your losses are going to look the same too, or similar.
Exactly. Yep. You there?
Yep.
Oh, you just cut off for a second.
No, I'm here. My video camera is just kind of glitching out. So I just turned it off. But yeah. Yeah, let's go ahead and move on to gold.
Yes. Yeah, we're on gold right now. So again, we're not going to do a whole history lesson. We're, if you want one of those, go back to the previous breakdown that we did. But right now, looking at the current monthly candles, like the previous 4, ended up bouncing off this trend, creating all-time or retesting all-time highs, 2075 over here from the invasion of Ukraine, right? Ended up rejecting that level, closing a very weak bullish candle. This candle comes up, retests 2000 once more, flips bearish, closes in engulfing lower high, lower low, engulfing strong bearish candle right over here. This candle creates its top wick, breaks the low of the previous candle, fills that wick, and now we're continuing down over here. But there's a lot of fear in the market, so we got to see where gold's about to go. But are we coming back down to this trend line here to hold support, or maybe back down to 1830, right? Previous resistance over here. Are we coming back down to that key area right in here and then continuing up to retest highs, right? We are bearish now because they're probably anticipating the rate hike, which is going to be Wednesday. So that could be it as well.
100%.
Tuesday, again, another rejection off of 2000 after the retest of the candle body highs over here. We ended up holding support at 1910, pushing up, retesting this area. Hard rejection, bearish close, no bottom wick, but this candle creates its top wick past the low. Closes below 1910. Resistance to the left. This current monthly candle has already filled that wick, or this current weekly candle has already filled that wick, and we are now below 1872. The previous resistance to the left got previous support as well. This is the weekly time frame, so that's a strong area over there. Are we continuing back into this key area? Daily. So now looking at the daily time frame, we're just putting lower lows and lower highs over here since tapping 2000, right? Lower lows, lower highs. Now just closed a very strong bearish candle over here. This is very simple price action here on the daily. You ended up reacting to this area, key area, pushing down, closing below 1872. Previous resistance here to the left, resistance here to the left, and then you can see that all the way to the left here. So what are the chances that area gets retested and we continue down to fill that wick and retest the lows over here, which I'm actually going to mark off 1850 as a significant area that we could see price reacting to.
100%.
Looking at the 4-hour, again, you ended up getting like a little fake out up here, right? I'll draw this right
More like
there.
a test of this bearish structure, right? To continue pushing down.
Yep. Nice push up. We created this low over here, pushed up into this area. Short-lived buys you could have taken. Price ends up holding resistance and then tanking from there. Right. We had a nice bearish movement this morning on gold over here. So now we ended up closing below 1872, holding support, and now we ended up just getting a bearish candle. Now I've seen this set up many times. I could see us continuing to push up passing the high, tapping this area one more time, holding like maybe like a double top or something like that to continue down and retest these lows, right? Or we're just grabbing liquidity real quick, and the next candle is going to hold that resistance and continue down. 30-minute now, we're sitting in this range.
Hourly.
Hour, yes.
Yeah.
Thank you. We're sitting in this range now. Yeah, you can just keep this resistance right here. So what's going to happen? Everything is sideways in here now. We ended up creating a higher low over here, and now we're basically just pushing up. We're not forming any kind of lower high yet. We could be, but we're not yet. And is this going to be a safe range to trade in? We got to see, how price starts reacting in this area up here. If we start holding resistance to continue down, is this worth trading in, or do you want to wait for 1875 to break? All right, so now what we ended up getting, we have this resistance right here. Now this, to me, I don't know, this can trap a lot of people where you feel like it closed above, but if you look at this wick and draw your zone from there, we really didn't close above here, but we'll keep this here for now. Are we going to hold some kind of a higher low over here and continue up? With gold, this is obviously a big enough range to scalp. You got about 56, 57 pips here. You could very well grab a trade at least up into this area right here. You got about 40 pips. So if you can grab, if you see your setup and you can hold a nice support somewhere in here, price keeps respecting this little bullish trend over here, and we grab like a higher low and start continuing up, passing previous highs, you could very well grab this move up here. But just again, Sharma's a famous quote: understanding the limitations of your trade and knowing that these are possibly only short-lived buys, because you are in a very bearish structure here on gold. Actually, if we draw this right here, okay, that shows a lot here. So we've been in this bearish trend ever since that fake out on the 4-hour. Now we're just pushing down. Could we get some short-lived buys up into this key area right here? Price holds resistance up in here, and then price continues down just like it did over here. We do the same exact thing over here to continue down and retest the lows. Now you could possibly grab short-lived buys up here too. If price ends up breaking this area, holding support and continuing up, you could grab some buys coming up into these areas up here.
At that point, I would hop up to like the hourly and the 4-hour to kind of see, what is price doing there. It could simply be a retracement from a heavy sell-off that happened on higher time frames. Or if the fundamentals are supporting it, then you can look for, swing trade buy opportunities back up to the upside. But either way, again, like Stefano said, limitations of the trade. And also, you guys have seen a lot of our weekly outlooks. You guys have seen a lot of our live sessions and simulation sessions. So just looking at the candle anatomy that we have discussed multiple times, right? Exactly how would you take an impulse trade or a break and retest and all that type of stuff. I think you guys pretty much have a good idea of how to take advantage of any of these trade opportunities. But just keep these key things that Stefano has discussed in your mind for the rest of the week.
Absolutely. Oh, we actually got a nice strong close on GJ over here. I could see this wick getting filled. But again, Don't get excited. Wait for that close above this area because we could very well reject. But guys, have a great week. Are we going on Wednesday?
No, we're not going on Wednesday. So
That's
this
right.
week or next week, either.
Okay.
But the following week we will be back. And yeah, have a great rest of the week, guys. There's going to be important news. So interest rates, of course, from two big central banks coming out. And then just a reminder, we got the boot camp coming up as well, which we will release the details about soon. So if you guys have any specific topics that you guys want us to cover, feel free to comment below or message us, and we'd be sure to include them.
Absolutely, guys. Have a great week. Stay safe, stay smart.
Have a good one, everyone.